We speak to Wood Mackenzie Senior Research Analyst Rory McCarthy to discuss the European energy storage landscape in 2018. Rory, your report describes an increasing number of energy majors playing into the new European storage market alongside strategies into the grid edge. Can you tell us a bit more about this and how energy incumbents are changing?
Yeah, we've seen an increased level of activity, and that's from anything from oil majors to the traditional European power utilities. And I guess on the oil major sides, we've seen some pretty major plays. For example, back in 2016, we saw Total invest over $1 billion into SAF, the French battery maker. And earlier this year, they took part in a Series C funding, 65 million funding pot for ionic materials, a solid-state battery. So you can clearly see that's just one example that it's both a risk and an opportunity to invest in energy storage. It's a direct competitor with their hydrocarbon business, and obviously the future is set to ramp up quite significantly in the next 5 to 10 years for energy storage, whether that's stationary or in electric vehicles, which again directly competes with hydrocarbon business. Then on the other side, you've got the conventional power utilities across Europe, and they're making plays directly into companies, small tech firms, for instance, whether they develop batteries or they manufacture battery technologies or develop batteries themselves. And they're also investing in aggregators. So the route to market across Europe, for example, is typically through an aggregator. And ultimately, they see the value of flexibility increasing in future. So when all this volatile energy is increasing, so whether it's from EVs, whether it's from increased penetration of solar and wind, there is a risk there that it's going to be more difficult to manage a portfolio of this ever-changing energy mix. And energy storage can rapidly ramp up, it can fill gaps, it can shift energy around. So it's got high value that reflects the strategies we're seeing in the marketplace.
The report covers the ways in which the UK and Germany are leading the way for the utility scale on commercial and industrial behind the meter storage. What is driving these markets, and what does the future hold for large-scale storage in Europe?
So let's start with the UK. The UK, as everyone knows, is an island. We're connected physically in electrical terms to Europe by 4 interconnectors. So we've also had significant increase in renewables. So markets and power balancing is an issue. We had significant ramp up of solar deployment off the back of subsidy, and by the summers of 2015, the system operator was seeing significant issues from solar, specifically on the system, and it really didn't have the tools it required to balance the system and the sort of volatility that we're seeing due to solar. So coincidentally, storage was starting to make a name for itself in the US markets as a tool, a solution for balancing things like intermittent renewables on the system, particularly solar. So National Grid, the system operator of UK, ran a tender and for 201 megawatts of storage back in 2016. And this really kick-started the market for energy storage in the UK. And now on a monthly basis, storage developers, storage operators, aggregators can play in the UK frequency market. So that's pretty much dominates the revenue stack in the UK. In Germany, again, they had significant renewables on the system, so we're seeing balancing issues. And as such, they opened their frequency market. Again, was feasible to play in that market since 2016. But as technology costs have been reducing and as utilities have seen the strategic value of storage, we've seen more and more utilities play in the German frequency market through time. And looking up outside of the UK and Germany, which are the 2 biggest markets right now, we're seeing the other markets open their doors. So other system operators across Europe are seeing the benefit of storage, and the costs are coming down, and they're slowly but surely opening their doors. And this is in line with European Commission requirements to allow all technologies, including storage, to offer services to the market. Currently, if we just look at UK, Germany, this market's probably around 1700 megawatts deep. In mainland Europe, the frequency market is probably about 3 gigawatts, and if we include UK and Ireland, we probably get to about 4 gigawatts. So we're not saying that that's the finite size of the storage market. There will be other technologies that play in that. But the first gateway to a storage market, or what kickstarts a storage market in any country, as we know, is our frequency market. So there's significant gains to be made when other markets open their doors for this.
To finish up, you model a 54% cost reduction in residential solar plus storage since 2013. Your research states that this is still some way off from being economic. So why is the residential segment in Germany the biggest country segment in Europe? And can we expect this trend to continue?
So Germany kicked off its renewable subsidy program before anyone else in Europe, and it was one of the first in the world to actually introduce subsidies for things like solar energy. And as such, they started seeing impacts on the system before anyone else. Now, Germany, before anyone else as well, across the world, saw the solution that energy storage could bring to the system. So back in 2013, it introduced a subsidy program for solar plus storage. So storage in a residential setting can help reduce the volatility from solar and domestic use as well. So it's a very clever place to put the system in itself. And because of that, it's seen a pretty sustained ramp up in deployments. And in August this year, they hit 100,000 deployments, and that's pretty much the biggest segment in the world, the biggest residential storage market in the world. That subsidy is set to be removed at the end of this year, but we would still predict and expect sustained rollout in Germany. And then when we look away from Germany, Italy has recently introduced subsidy programs, and it's probably the second biggest market we're seeing on the residential side in Europe. And Ireland as well has just introduced a solar subsidy program with some requirements for storage above certain threshold sizes of those systems. And where the subsidy goes, we will see expensive technologies follow. I mean, it is interesting. So we have seen the 54% cost reduction in systems. Interestingly, it's still a challenging economic case. It's still taking a long time to pay back your system. In an investment side, it probably makes more sense just to install solar. But that doesn't prevent people from fitting the bill to be part of the energy transition, to alleviate the risk of increasing bills in future. So we're really seeing the high cost to access this technology doesn't put people off, and we'll expect that trend to continue.
Well, a big thank you to Rory, and thank you for watching. If you enjoyed this interview and would like to find out more, be sure to head over to dukascopy.tv.